All right. Good morning. Good morning. Good morning. How are you guys doing today? Oh, we got something I need to do. Little technical difficulties here for a second, folks. Just hold on 1 second for me. We'll be into this in just 1 second. We'll go full screen on this. Hold on for a second. I'll be right back. All right. That should help. All right. Little technical difficulty there. Sorry for the slow start this morning. All right, here we go. The market's starting to run already. That's the open. Is that the opening bell? 14. Let's see. That's the opening bell, and away we go. All right, we got the S&P in the upper left-hand corner. We got the Dow in the upper right-hand corner. We got the Russell in the bottom right-hand corner. Oh my goodness, what happened to the Russell? Oh, that was weird. And we have the Nasdaq in the bottom left-hand corner. That Russell's going way too fast. Let's slow that thing down. That's the problem we had before. We'll just put it on 1 minute. At this rate, you can't go range bar 6 in the morning bells. We've learned that, right? So we're on the 1 minute chart on all of these. I've got a good show for us today. I'm going to go over, and you saw in the little marquee, we're going to go do some stock trading, and we're going to look at the seasonal nature markets. We did that in the futures market last week and had a lot of good feedback on that. And I did mention that we can do that in the stock market as well. And so a bunch of people said, let's do that in the stock market. So I actually have a class at the university where I teach this, but we'll kind of jump ahead because the people who are in the class right now who have taken the first semester class want to see that again. So still got some people from that class who are like, let's look at that again in the stock market. We kind of haven't done a whole lot in the stock market. We just finished our stock market class. Tonight is the live class. It starts again at the university. We can bring up our schedule. Got my little schedule here. So here's the schedule for the university class. This is week 3, February 5th, Monday, February 5th, day trading. So we're going to do a little, it says here on the schedule that we've got day trading scheduled. So we're looking at the day trading. We're looking at this. We're watching the market, see if there's not a quick opportunity for us to take some kind of a trade, but the market's just going kind of nuts right now. Flushing down on the Dow and flushing down on the Russell, and it's rallying hard on the Nasdaq. So today is our day trading class. You can see tomorrow we say day trading throughout all this this whole week is all day trading because we start our day trading class. So back to the markets, we are gonna jump over, and we just finished our stocks class. So we want to go and look at some stock markets too. So we want to do a little bit of both. We'll just wait for this market to kind of watch the ponies run and see what happens here first thing in the morning. Look at the news. We got some news coming up. So we want to be mindful of the news. So the Dow is flushing. Let's see if it won't go down there, hold, and then turn and rally once again. We're not getting a whole lot of movement out of the S&P. Oh, that's 15-minute chart. Let's put that on 1 minute for now as well. We want to put I didn't get a chance to work on my spreadsheet like I wanted to, so it's not got the column for options. But we're going to go over and do some. We're going to play some options in this. We're going to try to. We're going to go look at the stock market and see what it's doing. See if there's not some opportunities. We put some options on the stock market too. We got that running over here. Watch this magic trick. Boom, there's the stock market. And so that's what we're looking on the stock market here. These are the daily charts. And we're going to go in here and I'm going to run some seasonal scans. We're going to see what's going on right now in the markets. But these are just the indexes. So we got up in the upper left-hand corner, got the S&P 500. We've got the Dow in the upper right corner, just like on the futures version. This is the Qs or the NASDAQ down in the bottom right, and then the Russell in the bottom left. I think over here I have that differently, right? I have the Russell in the bottom right. Usually I have that on the left-hand side, but we've been trading it. So we haven't been trading the NASDAQ nearly as much because it's such a big market. So sometimes what I like to do is, and these are the minis, okay, and we're in the futures market. So let's come in here. I'll give you a little banner quick to describe to you what's going on here. Maybe if I got one. There we go. So first of all, for those of you who are new, my name is Lan Turner. I am a teacher at the university. I'm a former instructor at the Chicago Mercantile Exchange and the Board of Trades Education Center. But I teach at Utah Tech University right now. So that's why I was mentioning that our class tonight starts with the day trading class and technical analysis. We're excited for that. If any of you guys are in the local area and you want to go down and sign up, go call the university and tell them you want to sign up for the Lan Turner's technical analysis day trading class. And that starts tonight at 6 o'clock in the Udvar Hazy Business Building. So that's where we'll be on the second floor. So come and join us. And I'll see that NASDAQ starting to flush all over the place. Now it's starting to rally. So I think the Dow's going to probably come down in here and probably turn around and start to rally once again too. Lan, get in there. Fight, win. No, we're going to let this thing slow down a little bit. I've been doing that a lot lately and getting my hiney handed to me. So I want to be a little bit more judicious and careful and not be quite so crazy on these things. But these are the mini contracts over here in the futures market. And so to put a mini contract on, we have leverage. And so in the futures market, here's another little marquee for you. It says we're in the futures market or the Chicago Mercantile Exchange. This is not the New York Stock Exchange. When we're here in Chicago, there are no pattern day trading rules. So we can trade, open an account with as little as $5,000 and trade to our heart's content. So this is a nice place to come. And the great thing about it is you can open up an account with a small account to get started. And if we look up here at the key in the upper right-hand corner, you can see that we have day margin. Since we're day traders, that's the one we're concerned about. It says you have to have $750 to put on one contract. That's in the Dow, and that's pretty much across the board right now. Well, it looks like the NASDAQ is $1,000. And we got the Russell, it says it's going to be $750 as well. It's not downloading right now. And then the day margin on for the S&P 500 is $750 as well. So the NASDAQ is a little bit larger, so that's why it's a little bit more money, $1,000. But for $1,000, you can put that on, and let's draw a dollar calculator in here. And had you got in, let's say right here on we'll just go from the peak to the valley to where it's currently trading. That was a $545 move right there with a $1,000 investment or $750 investment. All right, so you put in $750, ride that thing from the peak to where it's currently trading. That was $554. What? No way. If you'd have done that over in the futures market, in the stock market, what would that have been? Let's go see. With a $750 investment in the stock market, well, let's see. We're going to have to go. Well, this is the demo account, so we're 20-minute delayed in the stock market version. We don't get live streaming quotes in the demo account in the stock market. I have to have live accounts over there. So we'll give that a minute to catch up, and then we'll go do the same thing. But you can, well, let's see. We got to be able to do some kind of comparison in there, shouldn't we? Go into the Dow. We'll pull up. Let's pull up a 2-minute chart. Bring this up, and let's just say from this peak to this valley right here, if we had put in $750, let's go into our preferences, and $750 would have been how many shares? Look like, let's just say 2 shares. It's pretty close. 2 shares, you'd have made $4.42. So from that peak to that valley with the same investment, $4.42 in the stock market, whereas we just saw that over here in the futures market, from that same distance with $700 would be about right there, $425. So which would you prefer to trade? Now, of course, it goes both ways. I mean, just because you can make more money, you can also lose more money. So you don't have as much of a leeway in there, right? I mean, you got to be careful. That's why we can come over here and in the futures market, We can tone that down. We don't have to trade such a big market, make so much money when the market moves. And that's why I was saying down here in the NASDAQ, we can come down and we can open up what we call, instead of a mini, we can open up a micro. So let's do that. Let's come in here and we'll just switch this one over from NASDAQ mini, which is even larger. I mean, it's even larger than the Dow. So we'll come in here with our $1,000 investment at $600 instead of $400. So even more money on the Dow. So that NASDAQ's a pretty big market. So let's tone it down a little bit. We can come down and we're going to open up the micro. All right. So we'll come down to the NASDAQ and see how I've got a mini. That's what we're looking at now. This one here is the MNQ. So the mini micro. So we just call it a micro. And I'm going to go ahead and I'm going to click on that one. And we have to select a contract month over here in the futures market. Something you don't have to do in the stock market, but it's not that big a deal. We're just going to take the closest one, the dark one in here, the one that's bold. We'll take that one and put that up there, and you can see it set in there at the daily. We'll just go and put that down to the 1 minute chart just like we had. And you'll notice if I put that underneath it, they're basically exactly the same. I got a different indicator on there. Let's turn that off just so they look the same. There you go. You can see they look almost exactly the same, right? They look exactly the same. It's the same market. The difference is that when I draw a dollar calculator from the peak here to the valley there, that's $1,000 investment, makes you $595. But if I do it from here to here, you can see it's $64. And the difference in the investment amount, if you come over here, you can see again, the day margin is $100. So this is a $100 investment to make $64. This is a $1,000 investment to make $595. So you can choose which one you want to trade. This one might be a little bit more liking to you if you're a new trader. And so we'll kill this one. We'll just close that one out and we'll put this micro up there so it's not quite so nasty. All right, so not quite so nasty, but it's still a lot bigger than if we went on over again. If we go over to the stock market version and we look at that, same investment still only makes $4.42. As opposed to over here, we draw that in there. $4.42 goes to $64. So that's a little better, right? Same investment, $64, or over here, $4.42. So a little hard to pay your bills on $4.42, but a little easier to pay your bills on $64.50. And of course, up here, if you want to trade the Dow, a lot easier to trade your bills on 590 than it is on 64. Just depends on the kind of risk you want to take, whether you want to be in the stock market where you have to have $25,000 even just to place a trade, or over here in the futures market where you can do it with $5,000. Open your account with $5,000 or $25,000 in the stock market, and then over here, trade to your heart's content. There's no limit on how much you can trade. All right. Whereas if you're in the stock market, you have anything less than $25,000, you got to have. We all know that we have to have, right? Only 3 day trades in a week. That's what your limit is. Otherwise, what do they do if you day trade more than 3 times in a week in the stock market and you have less than 25,000 in your account? Well, they freeze you out, man. They shut your account down for 90 days. They put you in the penalty box. It's like playing hockey and they throw you in the penalty box for 90 days. Say, you can't trade anymore. You day traded more than 3 times in a week. You go to the penalty box and they shut your account down, freeze you right out. That's no fun. Come over here. We don't do that. We don't do that in the futures market. No penalty box. There's not even a penalty box over here. So you can't get thrown in the penalty box. I've never seen them shut anybody's account down unless they just run out of money. I mean, if you run out of money, you go in the penalty box too, right? Same thing. All right. I'm not seeing anything in here that looks really fun. This market looks like it wants to fall once again, but this is the Russell. I'm going to bring the Russell over here. All right. Right now, this market just keeps falling down, falling. But I look for it to catch down here. I'll watch for it to catch. So we're getting little green bars here on the Russell. Maybe the market slowed down a little bit. We could go over and what generally happens is we get a high, right? But notice that this thing's coming down. It's been coming down in a downtrend. So pre-market, it was in the downtrend. So there's 2 things we could look at here. We've got our high right here of the open. We got our low right here at the open. So we generally bracket that. So we bracket that up. Let me turn this off. Bring my mug back on here so they have a friendly face to look at while you can see who's talking. And then we have this bottom down here. So then we expect it to kind of stay inside that little channel for a bit, right, as it wanders around in there. We don't want to get too anxious. But that's our bracket for the day. If it goes above that bracket, we generally consider the market's bullish on the day. If it falls out below that bracket where we kind of outlined that first trend of the day, then we consider the market bearish on the day. Right now, the NASDAQ's still trying to come down a little bit. Still hasn't established its low, so we're going to come in here. We'll draw this line across here on the NASDAQ. Let's wait for it to come down and turn and start to rally a little bit. I've got an ATR in here, average true range, and so that's an indicator that I like for just day trading, because it's just not a whole lot of indicators in here. I got a couple in here. I got MACD turned on, and I got a couple of moving averages in here. That's what's turning the price bars, or that's what's turning the blue arrows. That's just a moving average. That's all it is. You can see in there it's a moving average of 3 and 28. So it's a 28 period moving average, and then 3 is just showing us the price of the market, the 3 period moving average of the market. And when those cross, it gives you that arrow. The yellow arrow is the ATR, it's just the average true range. That's all it is. The only indicators I have turned on, those two. And then I have down here, I have the MACD. So the MACD kind of, it's a decent little indicator. So we'll watch that. You can see it's curled down here. We're on what we call the call to arms section. Call to arms. That means this market's turned from the bearish into bullish. And so we anticipate a continuation of the uptrend and making this market go bullish. And we want to see that cross over that middle line here on the histogram. Once it breaks above that, then we're considered in a bullish trend. We'd look for it to come back up, and that would be, we look for that market to be bullish and come up and break above that previous high and continue the rally up, right? We also have the VWAP, volume weighted average price, sitting in there. A lot of people think that's important, so it acts like a rubber band and it pulls the market towards that blue line. All right, so as this market's coming back up on the Russell, I really kind of want to see a little ABC pattern in here. ABC land, ABC. I want to see it pull back against me a little bit here, and then I can look for the next rally up. Sometimes we don't get it. Sometimes we got too much strength and the market just takes off and goes without us. And if that's the case, it's hard to get into a market that just takes off and doesn't give us that little bit of a, see, we want a confirmation that we're going bullish. Let's bring this full screen once again so we can see it a little bit larger. We want a confirmation that the market's going bullish, right? So right now, if we draw our Fibonacci ruler in there, I'm trying to be a little more cautious than we've been in days past. We're kind of getting a little crazy just jumping in, and I think it was a good lesson to see that it's hard to make money when you're just going wild, hog wild, crazy, jumping in all the time and back and without any kind of a systematic plan. So trying to stick to my systematic plan. What's your systematic plan, Lan? I have a systematic plan, believe it or not. Let me show you my systematic plan if I can get it up here real quick. There's my systematic plan. If you guys have little cameras, you can take a picture of that. All right, pull out your little cameras. So this is the trend you can see over here coming down into the pivot point. So that's what we saw in the Russell, the little pivot point, 1, 2, 3, 4, 5. Turn around, start to rally. You got the buy from the ATR. Now we're looking for those 2-bar pullbacks, the red bars. I want to see 2 red bars pull back, and then I want to see a continuation of the uptrend. So we'll buy on a break above the 2-bar pullback. Now, it doesn't have to go green. You can see up there a little higher that we have where it pulls back with lower highs, and it just stays green, and then it continues to rally. But I'm looking for the little red bars right now, pull back, and then we'll look for a continuation of the uptrend. That's my systematic ABCD pattern. So that's what we're looking for over here. That would be a little ABC pattern that looks like this, right? We want to see it come up, come down, and then continue up like that. And that's what this MACD is telling us. Nice little call to arms down in here as it's turning green. So we want to get our order going. Lan, don't miss it. Don't miss your, oh, well, you're talking too much again. You missed your opportunity to get in there and go long. But we'll see. We'll see if we can. See if that market wants to rally now. We got to stop in here in case it turns around and just falls again, because that can happen too, because this is a market is in a downtrend, right? Because it's coming down. Like we said, it could come down, rally up, and then just boom, take off and drop out with a big ABC pattern in that direction too, right? It'll be a continuation of the downtrend. So we got to be mindful of that and say, well, we're going to anticipate that it's going to continue this uptrend because of these green bars. But if it doesn't, we just got to get back out, because that is also, continuing the downtrend, and the trend is your friend until it bends or ends. So that's the longer overall long-term trend is down, but we got a little reversal in here. So we're going to try and see if this market wants to continue higher. If it doesn't, if it fails on us, we got to just get out, because this thing could turn and flush and go all the way down. And if it does that, we can take a short position. Let's go ahead and get rid of some of these lines that I got drawn in here so we can see a little better. Sometimes I get talking and I don't do less trading and more talking and miss some of my opportunities, but we're not too bad on here. Now we just need it to continue to rally. It's going up, bouncing off of that 28 period moving average right now. See that? That becomes an area of resistance right there. It's got to bust through. So market's starting to slow down in here. We might get a reversal on here. I'm only long one, so if we wanted to, we could take the reversal. And I would do that here. We'd probably do that. We'll wait and see. I might just do it. I'm going to tell this thing to edit. We're going to come in here and we're going to try. Oh, it's already trailing on the ATR. The ATR set at 1 and 1. This thing's dying on us. I don't like it. I probably just want to get out. If it breaks lows, it's not going to go. We just take that off. So now the next one, it could still turn and go. I mean, obviously it could still turn and go, but it failed to do what we wanted, which was immediately break out of those 2 pullback bars, broke the new high, and it should have just kept right on going. It's too weak to go right now. It might come down and turn around and go again. If it does, the second signal would be a break above this high right here. If it breaks that 28 period moving average, then we could get in. Then you feel bad. You're like, well, I was in down here. I had a better entry. But where it failed here, you don't want to take that out. You don't want to take that chance. It's coming into a little pennant formation, as you can see. This little pattern right here. See that little triangle wedge pattern? So if it breaks out the bottom of that, we would then anticipate for it to continue lower. But right now, it's just being stupid. If it breaks out the bottom, we could take a short position. And then we'd anticipate that a continuation of the downtrend. We'll take a starter right here just to see what it wants to do. Oh, I took it with 3. That's okay. We'll let it go 3 short. I meant to do 1 short, because I had it set for 3 for a reversal, which would have taken out the long and put us in short with 2. That's a reversal strategy. So I had it set for 3 to that, but then I took the other one off manually, not paying attention to what I'm doing. Sometimes it's hard for me. I got this microphone here and it covers up the panel that I have to look at to see my quantities over there. Bring my happy face back on. Oh, look at this, dying again. We're just going to get stopped out again on this pullback. This market's a dead. That's going to stop us out right here, and we're going to be down again. Come on, you stupid thing. Look at how it's just all those topping tails and bottoming tails. It just came right back to dead center and died. Right into that Fibonacci sweet spot and died. That's pretty common. Sometimes you see it happen all the time, where the market goes down, comes back to Fibonacci sweet spot, kind of 50% retracement, and then just wobbles around in there because it doesn't know what to do. It doesn't know whether it should be bullish or bearish. So it just sits there. Everybody just sits and stares at it because they're doing the same thing I'm doing, right? They're all saying the same thing I'm saying. They're saying, well, if it continues that uptrend, we'd look for it to do this, right? But then they're all looking at this and saying, well, it's in a downtrend. I don't know whether to go long or short, or else everybody's doing what I'm doing. It's just kind of sitting on my hands. Of course, I went in. The bigger overall long-term trend is down. So let's see if it'll flush out the bottom of this thing with our 3 contracts. At least get us back to break even. We're down $80 right now. That's not too bad. We can recover from that. Really simple, but that's no fun to start the first trade of the week and the first trade of the day. The losing trade. That's not a good omen, is it? Okay, it's given me an opportunity to take some of those off. Saying, Lan, I just let you take one of those off at break even if you wanted to. Why didn't you do it? Because I was waiting. We don't want to be quite so heavy into this market. Take one off right there, break even. Means we have to change this quantity here. In case it turns and rallies, I don't want to be short 3 and have it turn and rally right there. We'll add our OCOs back in there with 2. Put my stop down here. If it comes up here, I'm just going to get out. Come on, you dumb thing. It's gone tired on us. Just died. Got all these arrows. Let's get rid of those. We're short 2 right now, but it doesn't look like it wants to drop either. Look at all these rotten bars. Topping tail, bottoming tail, bottoming tail. There's nothing. It's completely dead. Oh, now we're getting a bottom green tail, a flat bottom green bar. But it's just going sideways now. It's gone too far. We need it to break. We're still short. Now it's going to give us another ugly bar. Sorry, guys. I can't make the market move. Move, market. Move. I can't make the market move. If it doesn't want to move, I can't make it move. That's something I wish I could do. I wish I could just say, hey, market, I'm short, so go short. Here we go. Bounce off those yellow dots. You see that's using that right there is our strong area of support. If it breaks through there, then it'll continue to fall. But if it bounces off of there, if it can't break through those yellow dots, that's the average true range of 1 and 1. So if it can't break through there, it's going to turn and go this way. It's got to break through those dots. Look at our MACD saying, sorry, Lan. We give you the call to arms, but the thing's is failing on us here. It's doing nothing. Our best move right now would be to get out at break even and just sit and wait for another setup. But I'm going to hold on to it for a minute and see if it won't go. Yeah, this thing is just really not playing nice. Come on, you stupid thing. There we go. A little bit of a flush. Okay, we took that off just to get out of, because we were down $100. It gave us our money back. The market's being stupid. But yeah, Lan, now it could take off and go to what did you get out for? Well, I got out because I wanted to bring my account back to green. For me, I like to do that. That's a move I like to make. If I'm down red, I want to bring it back to green as soon as it'll let me. As soon as it'll give me my money back, I take it off the table, get back to green. Now we can wait for a whole new setup, right? Now we can come back. We can start looking to see if this market's not going to move and trend again for us. But right now it's just sitting really stupid and not doing anything. So it'll probably continue down, but I'm not going to, it's being so dead. I don't know. Didn't want to take the chance of having it just come down, turn around and flop around in there a little bit more and then take another small loss and be down $200, right? So we're up $85 green. That's good for a starter. At least we're not red on the day anymore. So we'll just kind of wait and see. Let's come back and see what the other markets are doing. Oh, look, Dow just dead as well. Completely dead. You know what we got, though? Watch this. This is probably why. We forgot to look at our news. 8 o'clock, we got news coming in. ISM Services PMI, Purchasing Managers Index. Trying to remember. Thank goodness, I'm losing my voice. All right. So keep forgetting what ISM stands for. It's not important. The important part is PMI. PMI. Purchasing. The GDP deflector, also known as the GDP price deflector. Oh, that's not the right thing. I thought I had that pulled up. This dumb program. Okay, so anyway, we got the PMI coming in at 8 o'clock, which is forecast is 51.7. Consensus is, has it come in yet? It's getting ready. It's got our little clocky thing. So we'll watch that for a second here. Watch the market. That's probably why the market's dead. It's waiting for that news event to come in. Look, we did the right thing. We did the right thing. We got out right there just enough to take some money, and now it's turning around and being stupid. But let's watch the news event, see what happens. See what these markets do. There it goes. Is that it? Nope, it hasn't come yet. What time is it? 7:59. I'm going to pop that thing out here in 30 seconds. We're going to have the news event. Let's see if I can do something like that. Can't. I'm trying to get everything on the screen at once. Squeeze that down. Squeeze it down, man. Squeeze it down. What's your number? Previous was 50.6. Let's see if it's better or worse. Squeeze it down, man. 53.4, so it's better. So the news came in good. Well, Purchasing Managers Index, if it goes up, the ISM Services PMI report consensus was 52 previous. United ISM Service Business Activity Report, 55.8, previously at 55. So that's good. Bigger numbers are better. It was forecast to be 51.7. It came in at 53.4. So we're getting good news. Purchasing Managers Index, they're buying stuff. The market flushed, though, on the buy. Maybe they didn't think it was better. I don't know. That's what I always tell you. Be very careful with these news reports when they come out. It's not for us to determine whether they're going to make the market bullish or bearish. We can look at it and we can say, well, that was good news. Purchasing Managers Index went up. It means they're buying stuff. And that's what you need. You need the purchasers to buy stuff. So Purchasing Managers Index said buy stuff. Look right there. If we'd have stayed in. You always say that, right? Oh, if you'd have stayed in, man. But look at this bar would have knocked us out anyway. It'd probably popped back and killed us. So that was the news report event. Would have come back, knocked us out, only to flush and fall. But now it's coming way down here. It's testing this previous low. Now it looks like I'm betting this thing's going to go up. That was good news. So it's going to flush everybody out, shake out all the what does Paul always say? Shake out the shoestring salesman and the weak sisters and shoestring salesmen. I don't know if it's going to just keep flushing down. We'll have to wait and see. That's not good news. There's no signal to get in. It's just a news event that's going crazy. These are 1 minute charts. We could put on the range bar charts, but I think the market would be going a little crazy for that one. Oh, what's going on here? I think we're going to bounce down here on the Russell. I think we're going to turn and go bullish. But I may be wrong. But I may be right. I may be right, but I may be wrong. Here we go. Let's mark that one off. Mark that one off. These are our points that this thing's playing against. That's on the S&P. This one up here, the Dow's playing off these points here. NASDAQ. We got a couple of points in here that it's playing against, but we're still playing against this low on the Russell. Remember, we're looking on the NASDAQ. We got the micro. So sometimes you think, well, it's not quite such a big market. You can take a little bit. You can take more chances. The problem is you take more chances on a micro. It means you trade more. You don't lose as much, but you don't make as much, but you don't lose as much either. But okay, it's breaking below that double bottom right there. My question is this thing, wow, look at the Dow. That thing's still flushing. Why is it flushing on good news? previous 50.5, and it came in at 53.4. We got the Fed speaking today at 12, but it's nothing too serious. Non-manufacturing PMI in the United States sales increased to 53.4 points in January from 50.5 points in December. Non-manufacturing PMI in the United States averages 54.9 points from 1997 to 2024, reaching all-time highs of 60 points in 2021 and a record low of 3780 points in November of 2008. Well, there it is. That's good news from last time. See, that was last time. This is January 2024 right there. They've got it in there. I don't know. Good news, and the market flushes down. That's what I always say. I said, don't. It's not for us to determine whether these markets are, whether the news is going to make the market go up or down. Just that the market's going to make the market move. You might think that was good news, but the bigger players are looking at that and saying, not good enough news, I guess. Maybe they wanted it to go higher. But you see in the forecast, the consensus doesn't make sense because the consensus is still, anyway, not for us to decide whether the market goes up or down on the news, just to decide that it's going to get, okay, down it goes. Well, we were in the overall downtrend. So the market was in the overall downtrend, had the little pullback, and it's just continuing that downtrend. The next one will be a little pullback there. So there's drive 1, there's our counter trend, there's drive 2. So we'll look for a little pullback and then probably a continuation of the downtrend with a third drive down. So I don't want to be going long right here with a buy. If it comes in with a green bar and crosses that average true range, the ATR, I don't want to take that first entry because that's just the counter trend to the second drive, getting ready to go into the third drive. Just how big is that second drive? Usually the second drive is the largest of the 3 drive patterns. So we have drive 1, counter trend, drive 2, which is usually the longest. Then we get the second drive, and then we get a little counter trend at the bottom, and then we get that little turnaround. That's where we see it turn, start to go back up a little bit. Oh, Len, you just missed it. You were in that thing short with 3 contracts. Yeah, but I'd have got knocked out on that bar right there. Maybe not. I don't know. We were trailing on it looks easy right now, but when you blow it up and you're like, you're in the thick of things. I don't know. We had our stop on the yellow dots. Doesn't look like it hit them, but the spread might have hit them. Spread might have hit that yellow dot right there. I don't know. We got stopped out only to have it flush lower. That's what that bar was. That was a clearing bar, right? We call those clearing bars. So you're in a trend, and then you get a clearing bar, and a clearing bar is what breaks the previous high of the previous bar right there. So see the previous bar? That bar broke above it, took out all the stops, broke below it, took out all the stops. So it cleared the slate. Of course, that's the news bar right there. So that was the news bar, and it went all over the place. Came all the way down to here, broke it, then went all the way back up, came back, closed here, and then it continued down. So hard to trade. Didn't know that's what it was going to do. So now we're just sitting on our hands waiting for another signal or another opportunity. We'll just get in short right now, Lan. No. You can do that if you want to. But look, it's lower, high, lower, low, 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 lower, low. All those lower lows. We didn't even get one little pullback to give us a little bit of a opportunity to take an entry on that. It just kept flushing like a toilet. Turn off the Heikin-Ashi. Heikin-Ashi. Still all these lower. Boy. That makes you feel bad, doesn't it? When that happens. Makes you feel bad. Still didn't give us an opportunity to put one in, even on an individual single bar. Didn't even get one pullback. Flush, flush, flush. All right. Well, let's jump over and we got ourselves $85. Can't cry over spilt milk. Just feel bad we missed that whole thing. We could sit here and wait. See if it couldn't give us a little bit of an opportunity to oh man, it's just flushing. Why is it flushing on good news? I don't understand that. I don't get it. Why are they flushing it on good news? I wonder if they want to drive it down just so they can buy it lower and ride the whole thing all the way back up. I don't know. We'll have to come back. I'm going to turn the Heikin-Ashi back on. Did anybody out here? I'm going to come and say hi to people before we go. We're going to jump over to the stock market and do some scans, and we're going to look into it. So I'm going to come say hi here before that. Did anybody in here catch anything bigger than an $85 trend? Some of you guys, I know you're all trading along with me. Any of you have better luck than me this morning? So we got Bruce R. It's great to see you, Bruce. We got Kirk. We got John David Lundberg. Great to see you guys all here. Steve Scott, good morning. Larry McIntosh, great to have you. Selena Pavlovic, great to have you, Selena. Got WC Randy, great to have you, Randy. Gary Thomas is in the house. We got Bruce. I think markets are waiting at 8 a.m. You were right, Bruce. John David Lundberg, trading wait till 8, 2 stars news. We've got John David Lundberg, 3 star. Yeah, it was 3 stars. And then we got Mark Peterson. What everybody knows ain't worth knowing. That's I think we're going to have to put that on a plaque and hang it on the wall. That's Mark's favorite saying. Brian Johnson, good morning. So what everybody knows ain't worth knowing. So maybe that's why that thing flushed. That's why I always say these news events are not for us to determine which direction the market goes, only that the market's going to move. And I'm feeling a little bad that we missed that big drop on there. But heck, when you get good news, you don't want to take a short position against good news. Even though all the setup was to take a short. There, look at that. Went into a nice little triangle right there too on the Dow. Still tough to trade that when you don't know what's going on. Okay, we're getting a little rebound here. Now you can take this both directions because this might be just the counter trend to the third drive, right? So we don't want to just take a long position here in anticipation that it's going to turn around because this could be the counter trend to the third drive. Just come back and then turn around and pop and go back down again. If it is the reversal and it does want to go back up at this point, then we'd need it to go up first. We need it to go up, and then we need it to come back down and then go up. And that's where we want to get in right here. Once we confirm that it's going to go up, that would be a head and shoulders formation. Left shoulder, neckline, head. We look for this little right shoulder in here, and then the right shoulder right in there. So that neckline, we would want to see it. See, we're going to line it up with this peak up in here. So see that peak right up in there? We want this to be one big, nice, natural trend line all the way down there. So we can kind of guess where that would be by lining those up. Kind of like that. Along with those bars. So that would be kind of a nice, natural trend line right there. But it doesn't look like it's going to go up and do that. It looks like it looks like this is the counter trend to the third drive down. So we're getting drive 1. The B drive, which is generally the longest drive, and then that would be your third drive down. The third drive is usually the smallest drive. But that break below that green bar right there, that was our signal for a short trade right there. That was the short entry. And now it needs to come down and break that previous low. A lot of guys will wait till it breaks the previous low before they get in. I like to get in a little earlier. Right there, and I was not paying attention for the short position. I was looking for the long. Right there. It's going to be a double bottom bounce. Look, the MACD's gone green. Oh, it's gone red again. So this is the C drive starting right here. Not really. It didn't break the ATR. Usually you want it to break the ATR to cause that to be a third drive. All right, we're running out of time. I got a short amount of time and a long time to get there. All right, here is our scanner. So we're going to do a little seasonal scans. Then we're going to pop into the stock market. We're going to place a couple of orders, but we're going to come in and I'm going to look at just bullish in the stock market. And we could look at both, but right now, just for this example, we're going to go. This is Trade Miner. We did this last Friday for the futures market. And we're going to just hit that search in there. You can see that I've got it set up so that search the trend of, and I'm not going to use the symbol. I'm not going to use individual stocks. We got all the individual stocks in here. Right now, I'm in the settings. You can see I got it set to the S&P 500. But so we're just going to scan the S&P 500, all the stocks in the S&P 500. So that's our search. And I'm just going to use month. So I'm going to say month of February, since it's the month of February. We want to see if there's not any trading opportunities right now. We're going to find trends that have won at least 80% of the time. Now, we could turn that up and make it 90% if we want to, but 80 is pretty good. We can run the scan again if we would like, showing just bullish opportunities. All right, so we're going to just look for bullish opportunities, and we're going to list trends that last at least 10 trading days, but no more than 30 trading days. So this is a short window of time, not a big, long window. Find at least 15 years of history. So that has to be 80% profitable within the last 15 years over the 10 to 30 day time frame. All right. And that's what this is. Then remove same symbol duplicate start dates, remove same symbol overlapping dates. Those are just some filters so we don't get so many overlaps. I hit search now on this thing. And again, this is going to be 80% wins over the last 15 years within a 10 to 30 day window in the month of February. We're just going to look through the entire S&P and see what stocks have been bullish during this time frame, seasonally speaking. All right, so there we go. There's our list. Now it comes out and it's kind of like a spreadsheet in here, and we got a header across the top, and so you can sort on any of this stuff. Right now I got it sorted by score. So 5 is the highest you can get, and this is a 4.8. So 5 is the highest score you can get, and of course this one's I sorted it, so that's the worst scores. Now, the worst scores, that doesn't mean that it doesn't hit the criteria up here. It certainly does. You know, for trends, you have at least 80% winning rate over the last 15 years. The problem is it's just not made as much money with as accurate of a score as some of these other ones. So this one it likes best. That's the highest score in the month of February right now is Progressive. The Progressive Corporation between February 6th and February 26th, 82% of the time over the last 22 years, in that 21 calendar day period, it's averaged 3% return. So it's been pretty bullish. You can see down here in the bottom window, these are the months the years it's had a hard time. 2007, it missed it. 2009, it missed it. 20 and 22, it missed it. 23, it made it. So we're in the 24 data set. So that's what we're going to be looking for. That would be a good one to look at. This is Hershey, 4.6 score, February 2nd to March 4th. So we're in this trade right now. This one's February 2nd to March 4th, 81% of the time over the last 32 years, 32 calendar days, this thing's returned 4%. So we can also score on the highest average percent returns. You click on the header there. The highest one is 15. It's a yellow, but look at this one's a green. Now this is just a score that the software, we kind of have a proprietary formula where we score these. And so that's in there. It just tells you the score. Again, you can remove the score, ignore the score altogether because it's still this prompt up here, find trends that have at least 80% winning ratio in the last 15 years. It matches that. We just give it a score against everything else that's in the list and say, well, it's not quite as good as some of the others. It's not performed as well, hasn't made as much money or as a big a percentage. And we just kind of weight all that stuff and we put that into a score. So you can take that into consideration or not. It still falls within the category you asked. So that's Lululemon, February 27th to April 9th. 81% of the time over the last 16 years, it's averaged 15%. But that's because it all came at the first of the year, like 2029, 2010, 2011. It had these big moves, and that's why it got a bad score because all the big wins were at the first of the trend. And these last few, now 2022 was good. 2023 wasn't so bad, you can see. But that's Lululemon. So we'll just go back to score. We could go years and see which ones are the biggest years. There's 53 years. Look at that one. McDonald's. Now it's got a low score, but that's just because it's averaged out over so many years. It's had a lot of 81% of the time over the last 53 years, 41 calendar days, 5% on average return. McDonald's has been really good in the month of February. Well, that's February 29th. So actually going into February ends on April 9th. So March, April. So it's, yeah, that's kind of the end of the month. But look at that thing. That thing's really been bullish during, and a lot of that is, you can see it's not been doing it as big in the last few years. Most of the money came there through 1997 to 23. And then in the beginning, 1971, clear back there, it was doing better. So anyway, that's kind of how this works. So what I'm going to do is I'm just going to grab and sort by score. I'm going to just grab the highest scores. All right. So we're going to just go down and we'll grab, we'll just grab some all the way down. Well, look, we'll go just take all the greens. We'll just take all the greens. So highlight all the greens. We'll take them over here. It's too many. So we're going to go take them over into the neural network. So we're going to add that to step 2. And now we come into the step 2 into the neural network. And that's all the stocks that we had. And you can see the ones that are up here. These are the ones that are already in. They've already started. So you can see that this one, and this is on a $1,000 investment. So only $1,000 into the market on each one of these. You can see which ones. That one's losing $2. All the rest of them, that one's losing $4. All the rest of them are making money. So you can see this one on the list. Cadence Design is up 2%. This one's up 2%. This one's up 0.7. This one's up 2.25% on Builder First. That one's up 4%. Eaton Park. That one's up 4%. It started February 1st. But we're not on February 1st. We're on February 5th. So we have to come down here. There's February 5th. And so we really don't want all these that have already started. That's too late. So take those off. So now we're going to go start February 5th. Now I could come in here and have the neural network do a scan. But in the interest of time, I'm not going to do that because it takes a while, because it has to scan every single month for every single product, for every single one you got in there. It goes back and it looks and it creates a fingerprint. And it says, all right, this fingerprint for this year. So it goes out and looks at the current market. It says, this is what the stock looks like right now. And now I'm going to go back and create a fingerprint for every single month, all the way back as far as we got time for. And we're going to compare. And then the neural network, the chat TNT, that's what chat track and trade. This isn't track and trade. This is a trade miner. Chat TMP actually goes back and then it compares this fingerprint against all the historical fingerprints. And then it says, is this more like a winning year or is it more like a losing year? And then it gives you a ranking. So, but in the interest of time, I'm not going to do that. We're just going to take these and take them all. Well, I don't want to take them all over to the portfolio. Let's sort some out. We don't need to go out too far out into advance. Let's start. Let's say this is 12. We could go out into next. Let's just cut these all off. All right. These. So just for the next week, let's get rid of all those. And we'll remove those, remove selected. And so all we have are just the ones from February 5th to February 12th. That's the next Monday. Let's even take off that one. Let's remove that one, remove selected. So just this week. So starting February 5th, going to the February 8th. And those are some good green scores. And again, I'm not going to calculate these. I'm just going to take all these over and we're going to go to the next set. Oh, well, how much time have we got? I want to do it. I want to calculate them, but I don't. Yeah, we're going to forego that because it takes a while. I guess we could run it, and why don't we go ahead? I'm going to hit calculate. All right, and now what I'm going to do is I'm going to go back over to the futures market, and we'll see what's going on over here. Okay, we're in the third drive. Look, we could have taken our short position, and we'd have been in good shape. If we'd have taken that sell signal right there, we'd still be riding this C drive down. So we didn't get the little reversal right there. Let's get rid of all these lines because that reversal didn't work out. So it's going into the third drive. That would have been a perfect little setup for us for the short position going into the third drive. That got ugly right there, but we would have been trailing on the yellow dots. So it would have been okay. We wouldn't have got stopped out. How much would that be right now? From this entry point, let's say we got in right there to where it's currently trading. That'd have been $270 per contract. That'd have been a nice little trade. Did any of you take it? Did any of you go in on that little thing? That was perfect, right? Straight out of the manual, right? only upside down. But that was that perfect little setup right there, right straight out of the manual. I didn't take it. Did any of you guys take it? Not seeing anybody say positive yes or no. We got a lot more guys watching the class than what's in here talking to me in this list. So I know the problem with this is that you have to have a channel to be able to chat. So a lot of guys come and they don't have accounts with YouTube. Okay, now this might be the turnaround. But we're not technically at the bottom of the third drive, are we? I mean, let's come and talk about this for a second. Because we're not technically at the bottom of the third drive. Let's get rid of some of these drawings. Because this is the first break of the yellow dots. I called that the third drive, but if you look at this, if we count this, if we go into the manual, right? If we go into the manual, this is our manual. If you don't have this manual, you can get it. How come it's not flipping forward to me? I'm going too fast. Where is it at? Right in here? Yep, right in there somewhere. So this is actually our manual for this class. Yeah, that's an example. That's better. So that's the manual for the class. If you don't have this manual, you can go get it. It's on Amazon. Just search Lan H. Turner. You can get it. And then it has all of these drawings in here that tell you the A's, the B's, and the C's, and all that neat stuff. And that's what we're counting here. So this is actually, because it didn't break the lights, this is A drive. This is the counter trend right here. This is the B drive right here. And unless it breaks those yellow dots, we're still in the B drive. Now, it looks like it's going to break the yellow dots here, but you remember, in each one of the individual drives, we'll oftentimes get what we call fractal drives. So this is the first drive right here, a little fractal and a little fractal. So inside of the B drive, so this is the A drive, this is the B drive. We would then look for a C drive, but this is also A drive, B drive, C drive inside of this one trend. So this is the overall long-term B drive. So we call this B1. This is the B1 section of this drive. This is the B2 section, and then this is the B3. So as we come into the B drive, this is actually the end of the B drive. Now this could be the counter trend right here, and then we look for it to go into the C drive, because you get 3 drives, right? But inside of each drive, we'll oftentimes get 3 drives, depending on how much strength there is. And this has a nice strength, a nice strong move. So out of this B drive, or this second run, which is inside of those arrows, see the first arrow, the second arrow, then the down arrow. We haven't got an up arrow yet. And once we get an up arrow, that would end the B drive. So we need to get a yellow up arrow to end the B drive. But then the question is it going to end there, or is it going to go into the C drive, which we could get a C1, C2, C3, right? It's just the probabilities of that happening. You go in there, there's a probabilities table, just like when you go play blackjack, right? You have that little probabilities card that you can sit at your table. Did you know you can go buy those in the bookstore and then take them to the table with you and set them on the table? You can look at your probabilities of what your hands are. That's the same thing. We've created a probabilities table in that book, and you can have that little probabilities of table that says, well, what's the probabilities of this market going up, or what's the probabilities of it going down? Well, right now, the probabilities to go into a C drive break here. It's got to give us, really, I want to see it break those yellow dots to the upside. Come on, break them. Close above. It's got to close above and get us an up arrow. And that would be the end of the B drive. Otherwise, it's just going to be going into a B4, which is real low probability of success. The bigger the number, the bigger the letter, the worse the probability, right? The B drive is our best drive. That's usually the biggest drive. The A drive is usually small. The B drive is usually big. And then the C drive is usually the same size or very close to the A drive. So the A drive would be this big, right? Say it's $590. That means if this thing breaks lower and we get that little whippy saw thing like this, a little up down arrow right in here, we'd expect this C drive to go in all the way down to 1917. And that's how you do that 3 drive pattern. Okay, there it is. All right. Take the arrow, Lan. Take the arrow. No. I mean, you could. You could take the arrow, and oftentimes that works out really good, and we feel bad and we have FOMO, right? Because we missed out on a good run. But really what we're looking for is two things. We could look for this continuation of the downtrend now, right? Because this is the end of the B drive. The B drive just finished. So that's the end of the B drive. And now we could look for a C drive, the next drive down. So this would be a counter trend. And remember, we're on a very short time frame. This is only a 1 minute chart. A lot of traders trade longer term charts. And so to them, this is just one drive, right? But we see it as three drives. We see this B drive as a B1, B2, B3. So now we're getting this little counter trend in here, and then we'll look for the next drive down. If you go out to a 5 minute chart, you'd probably see this as one big drive with this would be the A drive, the overall longer term A drive, but it would have the three counter trends in it, right? So we're trading on a much smaller time frame than a longer term time frame chart. You got to take into consideration what people who are looking at longer term charts are thinking. So now we're looking for this little counter trend, and the question is it going to go through and prove to fall and come back down and go into the C drive, or is it going to come up here and end this B drive, go up, pull back, and then start to go up again and turn the whole thing around? And then that's where we'd get our head and shoulders. 1, 2, 3, 4, 5. That'd be your right shoulder right down in there. And then we would anticipate a turn. So this is what I keep trying to say. Don't chase the reversals. You need to get a little ABC bottom formation, a confirmation the market wants to rise again off of this bottom before you take a reversal, because this could just be a counter trend to the next drive down, right? Profit takers right here. So how far is it going to go back? Well, we would anticipate it going back to that neckline. We're going to measure that neckline up here to this peak up in there. And if we line that up perfectly, it'd be just like about right there. So that's kind of what we're looking for. Whether it goes all the way up there and touches that would be right where that 28 period moving average is at. That would be a nice little setup with a trend line coming across there. That's where we'd look for the bounce. And we'll look for it to come down. Now, if it comes down and breaks, if that right shoulder, the right shoulder is supposed to stay above this low right here. If that right shoulder breaks and falls down, then we're going into the third drive. But as long as it holds above there, if it holds above and goes up and breaks again to the high side, breaks that natural trend line, that would be our buy signal right there. So this is the call to arms right here. We got another call to arms back here, right? And that didn't work out for us. Flailed and flushed. This is the second call to arms. It could do the same thing. It could come up and then turn around and just flush, or it could come up across that zero line and rally. But we want to see a little pullback in there. I'd like to see it go a little higher. I want to see it come up and touch that line, show some strength in there to the upside, and then have it pull back in here. And then this is where you could buy on the dip if you wanted to, but we'd need it to turn and rally and start to show some, go red bars, and then the first green bar to make a new high right in here. As long as it's above that low, you could take an entry right there. And then you'd put your stop back below the low, but then you'd risk, that would be your risk, your distance. All right, you guys can watch that while you watch me on the other side. So you guys keep your eye on that. We're going to come over here and we're going to, oh, look, okay, it's finished. So I'm going to sort these by probability. And we got some high probability, high. We got some medium, we got some low, and some very low. So I am going to, we're just going to take these lows and very lows off. All right, so that's how we remove some more. Remove the selected. Now we have the highs and the mediums. Now we're going to take these, highlight them, and say add to the pick list. So we're going to put them over here in the portfolio pick list. So now we got the AI coming in here. Now I would like to be in no more than I'm going to just pick one at a time. I like the AI just to pick the very favorite one. One trade total, therefore, based on my current portfolio, I'm able to add one. Yes, I want it to be calculated, which it is, medium, high. So I'm going to calculate it. And we're going to auto select. And that's its favorite one. So the AI picked this one, February 6th to February 21st, Everest Group LTE, 3.67 over the last 22 years, 16 calendars, average profit has been 4%. So that's the one, and it gets a high score because look, most of the big, large green bars are in the end, not out here in the history. Problem is, it's had 1, 2, 3, 4 bad losers. That 2015 wasn't a bad loser, but look at the drawdowns. There's been some pretty serious drawdowns here. Now, the last 1, 2, 3, 4 years, the drawdowns haven't been that bad, but we've had some pretty good drawdowns in here where the market went against our position a little bit. So what I like to do is I like to kind of watch for that, see if the market's not going to go against our position before we get in. Just don't get in on the very first day. And that's February 6th. That's tomorrow. Oh, start on the open. It picked this one. This one starts February 6th, starts tomorrow. So let's go. So it's called, the symbol is EG. So let's come over here. Man, look at that thing flush. That's the 2-minute Dow. Flushed off that news report. Off that bullish, positive news report. Flushed like a toilet. Okay, we're going to come in here. We're going to go into Chart Miner watch list. This is the old one. Let's create a new one. This is the old one. Oh, look, that one rallied up big. What's that? JM Smuckers. That was a good one. So we're going to come in here and we're going to go. This is the YouTube channel seasonals. All right. Now I can't remember the symbol. It was EG, symbol EG. How come I can't switch that thing? Okay, EG. All right, so starting tomorrow, it says this thing, seasonally speaking, should rally. But everything is telling me right now that we should get a pullback. Doesn't mean we will. If we look at this, it looks like we got drive 1, we got drive 2, and the first drive. The second drive is generally bigger, so this is our going into the B drive, so the reversal. And then we got a high peak up in here, so this will be a little pullback. This could be, if we were to label these, that's the A drive, so this would be the B drive, broke out, B drive. So that's B1 right there. Let's use this little tool. So that's B1 on our count right there. So this little pullback right in here, if it breaks down in here and starts to go higher, that would be B2. And again, these are labeled for this purpose, for this is your probabilities. B2 is a pretty good probability of a rally. And then it go up. If it goes up, rally up a little bit, and then another pullback, and then another rally. That little spot right in there would be your B3. Right? So B3 would be right down in here. And then if we got another pullback, broke those blue lights, got another down arrow, up arrow, that's where you'd start your C drive. So then we'd expect this thing to come in and create a little trend like this down here, and then back up like that. And it breaks those blue lights in there somewhere, but it looks like those blue lights are curling pretty tight. I don't know if we can get that full extension all the way out into the B3 that big. But if we did, then, you know, it's not going to probably look exactly like this, but that would be your C1 break right there. And then we're looking for this thing to come up and test the previous high, right? But overall, the problem with this is that we've already made our multi-drive highs right in here. This is drive 1, drive 2, drive 3. And then we actually had this thing here where it came up and broke the previous high on that reversal, giving us a Wyckoff spring right in there, making out pretty much what looks like a drive 4. I hate that. So that shouldn't have broke that previous high right there. So a multi-drive high, and then we come down, and this ends up being to the downside. This ends up being, that's why I don't like this. That's an X1A1, X1SA1. If we were to label that, those of you who have your book, that's X1S A1. And those are low probability. And this one is actually doing pretty well. It's paying off as a low probability reversal. But the problem with that, X1A1s fail a lot. And so this reversal, if we draw our trend line up there, this projection is pointing down. So we go 1, 2, 3 like this, A, B, C up to here. And then we look at that thing to flush and come back down, test this previous low right in here. Break that low down in here, give us that Fibonacci bow tie, right? And then reverse and come back up on the bow tie. That's why I don't like this one to the long side, but doesn't mean it can't. Everybody gets a guess, as Mark Peterson would tell you. So you got two things conflicting here. That's why I'm not real fond about this thing. If I take a long position here in anticipation of the continuation of that seasonal trend, which says starts tomorrow to rally, I'd be real cautious on that one, because everything else on that Elliott wave pattern is telling us that thing going to flush and come back down and test this previous low on that X1SA1. I don't like buying X1SA1. I like buying X2SA1. I like to buy down here one more drop. That's where I like my probability. That'll be my first purchase here. And then if we get the third 3 drives down, right, then we get the third drive down, and we get the rally there. That would be our X3SA1, which is our highest probability down here. And that would be where we would, back up the car and back up the truck, sell the farm. That's where you like to buy right down in there. But this first rally, I'm not so much. I'm not too excited about that from a technical standpoint. But fundamentally, it says that thing's supposed to rally and go up and test these previous highs. All right, let's go to the next one. Select your next favorite. Oh, we need to tell it too. Okay, next favorite is MSI, Motorola, starting February 6th, starting again tomorrow. 80% of the time over the last 15 years, this thing's returned 4% bullish. So let's go MSI. MSI. Motorola Solutions. Ooh, look at that baby. Rock and roll. Somebody lit its fire. So there we go. There's drive 1. There's our counter trend. Boom, boom, boom. Going through the yellow drives. Notice we got the accumulation on the CMF right down in here. This is the distribution up in here. I like to buy when this is green down here. Whenever this is green down in here, that's where I'm looking for buy opportunities. But this thing is not green right now. But it is testing this previous high right in here. After a nice big boost, boom, took off. Counter trend. So this would be, if you come in here, let's label these up. Your A1. Actually, I'm sorry. B1. This is B1 right here. Boom, boom, boom. So that means this little pullback right here. Oh, it broke the blue lights. We didn't want it to break the blue lights. That means it pulled back too far. That's not good. I want to call this a B2. Right? We want to call that B2 right here. This is the first pullback on the B drive, looking for a 3 drive pattern on the B drive. And you're like, well, what's wrong with that, Len? That would be drive 1, drive 2, drive 3, right? Possibly. But if we're going to count this drive take into consideration the A drive, this would be the B drive. So this would be A1 down here, right? That's your first break of the A drive right there. So that's your A drive. Broke, come back down. That's your X1 right there. So that's your first exit. First exit is right here. So it broke those blue lights. So that's your first entry and that's your first exit. Pulls back down into the pullback. You get the buying opportunity down here on the CMF as it comes into the buy zone. Starts to rally once again, breaks through the yellow bars, goes neutral, right across those blue lights, just like out of the manual, straight out of the manual. The problem is it broke right here, broke those blue lights. I don't like that. The reason I don't like that is because that's now C1 drive. It's actually a C1, not a B1, not a B2. Because B1 is here. If it didn't break the blue lights, it would be B2. But it broke the blue lights, so it ends up being a C1. Doesn't mean it can't go in and become a 3-drive pattern. It certainly can. We can get drive 1, drive 2, drive 3, but it means you have to start another drive system out of there. But it needs to break above those previous highs and not flush like a toilet and come down out of that thing. Because this thing right here, this is our B2, X2. That's our second exit to the long side, and that's not what you want to see right there. That was too far. Market pulled back too far. Rallied too fast, pulled back too far. But I would like to see now, based on these seasonals, I'd like to see it break that high and continue the rally above that previous high and go, go, go Motorola. Not the prettiest setup. Let's see. Let's do one more. Go say we can do 3. Auto select 3. So its third favorite one is bookings. And I'm going to skip that one. And I'm going to tell you why. BKNG. Well, we'll go pull it up and I'll tell you why I'm not going to waste my time on it. BKNG. $3,548 per share. That's why I'm not going to waste my time with it. Let's do the next one. Oh, we got to select 4. Everest Group Ltd. Everest Group, EG, February 6th to February 21st, 82% of the time over the last 22 years, that's returned 4%. Now look, bookings down there returned 9%, but man, it's just too big. I can't play in that arena. So here it is. This is, look at that. That's a beautiful, that's 100%. Oh, it says 82% of the time over the last, are we looking at the right one? Everest Group, yeah. February 6th, that's a good one. Let's go look at EG. Oh, wait, we already pulled up EG. What am I doing? Oh, it's Lockheed Martin. LMT, sorry. February 6th to February 22nd, 80% of the time over the last 15 years, it's returned 2%. That's the one. But Lockheed Martin, LMT. LMT. Of course, this thing rallied on the war. So we got that big rally up on the war, but it's been going sideways. I caught this right here. I rode that up, and I made a little bit of money on this thing. I took it off right here. I took most of it off right there. I took the rest off right in here. So I rode that up, got a little bit of money out of it. I didn't go in big. Well, it wasn't small, but it wasn't big. So that was our, we're going to war. So I got in. And I caught it right down there, right on the takeoff. So this was our exit right here. So that wasn't an A1, but I guess it is. This is, you look at how ugly this is. Not real pretty. You're not going to like what I'm going to do here, but I'm going to call that drive 1, drive 2, drive 3, because that little thing in there really kind of screwed things up. But that's our drive 1, drive 2, drive 3. That was the bottom. This was our X3SA1, which is our highest probability, right? X3S, meaning short, A1 long. So exit, the third exit to the downside, first entry to the long side, A1. And then this thing popped us out right there. So that is our first X1 slash, I'm not going to count it to the low, to the downside. That's just our X1. So it's X1. That was our first exit to the upside. First exit to the upside. And then it came in, tried to go long, and we got a wimpy market here. And when it broke right there, that's where I took my last position off. That was our X2 right there, second exit. And I just took everything off right there. And then I didn't get back in right here. And I felt bad, but I was like, whatever. I didn't do it. I was in other things at that point. Glad I didn't, because look, this market's turfed it right here. X3. So this was basically this little spot right here was X3. And there's kind of two X3s, but this one here was X3. And then we got that solid X3 right there. But this is X3 right there. And so this is A1S. A1S. Man, this is too hard. I can't label all these. It's not hard. It's just ABC. ABC. Is it your first A, or is it your second A, or is your third B? Just go get the manual. It's in the manual. It's all lined out. You can do this yourself, and then you see what the probabilities are. You know what all the probabilities are of whether it's going to be a good trade or not. Do you want to take a low probability? You want to take a high probability? You just need to know what the probabilities are when you take these trades. If you're not doing this type of analysis, you're just flying blind. You don't know what the hell you're doing. You got to do your math. You got to do your work. Nobody said this was easy, but it's not hard. I mean, you can count to 3. That's all we're doing. Drive 1, drive 2, drive 3. Oh, it's the first drive of drive 1. Oh, okay, that's drive 1, A1. Oh, it's the second drive of drive 1. Oh, okay, that's A2. Oh, it's the third drive inside the first drive. Oh, that must be A3. Oh, it's a fourth drive inside. Oh, that's pretty rare. We don't generally get 4 drives inside of the first drive. Oh, that's an A4. So that ends up being probabilities, right? Low probability. I don't want to be taking A4s. Those things are rare. Bad time to be getting into a market, but that's where most people get in. Oh, the market's doing really good. I'm going to buy right up here. Really high market. That's where I want to buy. Buy high. You know, we've all been told buy low, sell high. Why don't you do that? Everybody always buys high. I'm going to buy high and sell higher. That's a hard strategy. We want to buy when the market's down here in these green zones. See that? The market's low, coming down, coming down, coming down. So I don't like this one as far as the seasonals, but it says seasonally speaking, starting tomorrow, this thing's going to be higher in 17-day calendar days. It's going to be higher than where it is tomorrow morning. And it's done that 82% of the time. But what we'll do is we'll watch for it to come down. We'll watch for it to come down and then try and turn and see if we can't get another drive in there. But I don't like this one. The reason I don't like this one is because this full reset right here, this will be it'll be an A1 if it crosses those blue lights. And that's not bad. A1s are not bad. So we're looking for a new A1, and that's what it's saying, right? Be a new A1. But it's got to cross those blue lights. So come around, cross the blue lights. But that would be an X. Well, it would be an X1 SA1, which is not a high probability. We don't like X1 SA1s. That'd be the first exit to the short side if this thing was going to reverse and go down. But seasonally speaking, it says it generally goes up in there. This is going to be a hard one. I don't like it. So we should probably go through and do some more, but we've kind of run out of time. We don't have time to do any more. So I'll just tell you guys what the others are. You got AON, ROP, VRSN. Let's see which one it likes next. Auto select AON. Is that the one so we got AON is the next one on the list. We got ROP and VRSN. See which one it picks after that. ROP, that's the next one on the list. Roper Technologies. And the last one is VRSN. We'll pick that one and throw that one in there. All right, so that's our portfolio for the next week. You saw which one. I drew those out. I'm not real fond of any of them, I guess. Bookings, too big. Kill that one. This one I'm not real fond of. Although it's in the B drive, but it's in the B drive off of that X1 SA1, which I don't like. We got Lockheed Martin, which is fallen. We got MSI. Motorola's our best bet for a long position in here. But it's got that double top. It's got to break above those blue lights to continue. So Motorola out of the 3 that we looked at, but those are the other ones right here. So you got the list. You can go through, look at the rest of them. I was going to put some options on, but now that we've done this, we kind of run out of time. Maybe we can do that tomorrow. All right, but we're going to start our day trading class. We're always doing day trading in this class, but we're starting our day trading class at the university. Oh, look, that's the pullback right there. Let's clear this up. We do the same thing on this level. We do the A's, the B's, and the D. Which drive are we in? Okay, so this is what we were looking for, right? We're looking for the downtrend. This is the B drive. This is the counter trend. This is the next drive. Did not break the low, so we're not going into the C drive. We're getting another counter trend. Now, it could be that the market is just going to wash sideways, but one up for every down and not do anything but just sit here and die. But technically speaking, If that thing would break right here, this would be our setup. Take a long position. Take a long position when it breaks above that red bar right there. In anticipation of the continuation of the uptrend, that would be your ABC off the bottom here. ABC. That'd be your little pullback, your first pullback, and then we look for it to come up, break that previous high. Should go long. Now, I'll let you guys decide whether you want to take that or not, but that's your signal. Break above that, it should continue to rally. It should break, and that should be our break. All right, guys. Do all the YouTube things. If you like today's class, give me a little thumbs up. And then Bruce R. says he's going to be in class tonight. Great. Can't wait to see you. We're going to have a good class. So looking forward to that. So do the little YouTube thing. I know there's a whole bunch of guys in here watching that aren't speaking to us over here. So if you guys want to subscribe, hit that little subscribe button and join us. Join us. We have fun every morning. And back to the stock. And we will see you guys tonight in class. And then tomorrow morning, right back here. Same bat channel, same bat cave.